All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I hope you had a fantastic weekend. Nice long weekend here in the States. And markets were closed yesterday. Uh, S&P futures did open Sunday night, and they traded till yesterday morning, and then reopened last night. And we saw them kind of tick up on some China data, or some China stimulus, I should say. And we're going to take a look at that. But let's start off here with the challenge. And we have one position on the board, and that's GOLD. We pulled a little bit off of it Friday as it hit our initial price target. And then right here, right now, it's up about 36 cents, 2008. So getting close to the next price target, 2019. So really only about 11 cents away here. With it, the option value is 216. So I'll log that here. And that puts challenge up over 5,000 here. Gives us what, 2,300 in gains, and does put it does put us in a position where same position as we were Friday, where we pretty much have all of our gains in play in the GOLD trade, and the just under 3K in cash, to work with and to put into play on the next signals. So not altering or adjusting GOLD right here. We'll continue to hold it. It's a nice chart, and one that we see it breaking the 20 into a new all-time high here. Not all-time, but a new high here. If we back this out to a weekly chart, we could see, 2008, 2009, 2010, trading up in the 40s. So a long way to go to get there, but getting up into the 2016 areas here. And it's a little bit of a different company these days, with a lot of the M&A activity with it. So. Anyway, that's Barrick here, as far as new signals, nothing on the board right now. But let me show you the scans. Here's the bullish scan as far as just the crossovers, right? Nothing here. And then on the bearish scan, we have a lot, right? There's a lot. In fact, there's a few more than there were a minute ago. American Airlines, Apple, Bank of America, ConocoPhillips, EOG, pretty much every single oil play on the challenge watch list is on the downside crossover list here. Las Vegas Sands, Kohl's, which got a bearish trigger on Friday, but rallied just slightly into the close. Intel, there's just a lot. GM is on this list. You can see most of them though have gapped down, and have kind of rebounded a little bit. They're not hitting new lows. Even something like an EOG, it's gapped on down but stabilized a little bit. Halliburton a little more selling, but Apple, gap down, not really getting that hard sell associated to it, here so far. So nothing that's signaling right now. A few that could by the end of the day, but we'll see how things play on out. And go from there. What we have seen on these big days where we get a lot of downside crossovers is we have seen that 2 days later we see a big uptick in the market. But we'll see how it plays on out. But nothing to enter right here. For the challenge. So that's challenge update. Not changing anything. Continuing to run here with GOLD. Now this afternoon I'll do a 30-day summary here of the challenge and give you some of the data behind it. And we'll do that in the afternoon session here. Okay. Now, this morning I listed some of the things that were going on in the markets, here today, and some of the things they were digesting. One of those things was the Empire State Manufacturing Survey, and this is a report that it's one that is important in terms of looking at what's going on in the manufacturing group here in the U.S., but it's only the New York region, and we get a Philly Fed survey, we get the Chicago survey, San Francisco, Dallas, we get from all the major Fed groups over the course of a month. Empire State and Chicago, they tend to be the most kind of headline-driven ones, but 12.9, that's a big number. for compared to what we have seen. In fact, if we want to put that into comparison here, I'll just go here to Trading Economics. And they probably have something right here. Yeah, 9-month high. But here we are, 12.9 right here. Last month was 4.8. Month prior, 3.3, 2.5, 3.3, 2.2. These are low numbers. The last time was May of last year that we saw double digit here with it. And if we kind of go back 10 years, you can kind of see what it looks like. And this kind of dip, and now we're starting to see expansion here. And it goes with some of the data that we have seen so far this month. Data is expanding. The data is growing, and that is very bullish. Now, we did not see that out of the zoo survey in Germany. In fact, you can see what it looks like here. This is something that has been improving, had a decent month last month, and then a big downtick here this month. And, something where if we back it out to 10 years, this is what it looks like. And, can you still say it's expanding? I think you can. But I think investors are going to give it a yeah, but there's the coronavirus, right? We've had the yeah, but U.S.-China trade deal. Now we have kind of the yeah, but coronavirus, which you can kind of blame things on, and the market will give you a little bit of a break there. So anyway, that's what we've seen in the data here today. As far as upcoming data this week, we're going to get we're going to get some inflation data here tomorrow. We're going to get the FOMC minutes. Then you can just kind of see there's a lot of smaller pieces of data, nothing overwhelming here until we get the composite flash numbers here on Friday, which are going to be the first look into February data, right? So far, most of the data we've had is looking at January. This will be the first look into February data, and, to me, that's going to be something that, good chance of seeing market reaction here too, okay? So that's, some of the data that's out there. As far as the overall market is concerned, we continue to see kind of the same, chop and churn. I know the market's down 15 points today, right? But 15 points is only 0.45% nowadays, right? And you can see the market's pretty much gone nowhere in the last, since the gap up. What was that, Tuesday last week? Market's pretty much gone nowhere. It's been fairly flat, fairly lifeless there with it. And, something where it's not going to last this way. We're not going to see this last more than 6-7 days. So, maybe 2 or 3 more days in that. But, probably not more than that. We do see small caps, pulling back here today as well. But, pretty much in line with the S&P. And then we see tech, right, which is outperforming here today, but just barely, right, which is pretty impressive given that Apple's down. 2.5%. But Apple came out and warned on their revenues, basically due to the coronavirus. And you say, well, okay, Apple came and warned on that. But if we go and we look at tech, right, if you just look here at my watch list, and you see, the things that are green: Adobe, Facebook, Microsoft. Google was on here, but it looks like, oh yeah, there's Google. It's barely green now. Amazon, right? A lot of tech names in the green here today, and a lot of that driven by the fact that Apple did warn. And you go, well, that's bad news. Well, not necessarily. When you're given a market where there's a lot of unknown. And there's now something that comes out and it's made known. A lot of times you can see some relief buying in that. And I think you can kind of see it a little bit with Apple right now, though, too early for me to kind of say, hey, bottom's in. But we see it gap down pretty big off of the warning, and then it's pretty much seen all buy pressure since. So anyway, that's that's kind of, we're gonna see other numbers come out. We're gonna see other things come out that express concern over the coronavirus. But are they going to be negative catalysts? Are they going to be relief catalysts here for investors? I think the jury's still out on that here overall. Okay. All right, let's see. I'm just looking real quick for a headline. We just saw S&P. We just saw S&P futures drop here. Let me show you. You can see they dropped here just shortly after I got on video, and yeah, coming on down a little bit, but nothing too dramatic. Looks like there is a President Trump tweet that's out there, but yeah. President says U.S. open for business, wants to buy China engines. Okay, but anyway, nothing that I'd look at and go, wow, that's super game changing. We have seen gold continue to bounce. In fact, if you take a look here, gold, continuing to rally up here this morning as it continues to be in a rather bullish mode. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you this afternoon. Take care.